It's increasing in popularity because what it does is it allows seniors to have access to the equity in their home to do things like repairs, go on vacations, pay for college, things like that, and giving them that financial peace of mind. You want to take the qualifications now?
Sure. So basically, let's say you have husband and wife, as long as one of you guys are 62 years old or your client 62 years old, you will qualify. Usually they want to have at least 50% of the equity to make it work. It's a little harder because the interest rates, right? It kind of affects every loan. So it's the same way. You know, it's not going to be everyone that's going to qualify, but there's still going to be a lot of people that you can actually help with this. Equity requirements, determining this, that's fine. Ownership. So obviously you have to own your own home, right? To be able to not have a mortgage payment, you have to have good credit history. If for whatever reason, and like I explained before, even if you're going into foreclosure, we can help you, but there's a little bit more restriction. So if you have excellent credit, especially for the last 12 to 24 months, you'll qualify with no mortgage payment, right? You're still going to be responsible for the taxes and insurance annually. So what I personally do for my clients, I go a little bit further, which I think everybody should. You know, I let them know, okay, let's break it down. How much are you paying in taxes annually? How much are you paying in insurance? Let's divide that by 12. Okay, that's what, $250 a month? All right, let's go ahead and open up an extra account for you in your bank. And every single month, you're gonna go ahead and deposit that money in there. That way, at the end of the year, you have it, you're not stressed, whatever. Now, if you are having trouble with credit, that's okay. The only thing with that is that instead of you paying your taxes and insurance on your own, we have to pay, we have to be responsible for it. So we're gonna include your taxes and insurance as part of the loan itself. It makes it a little bit harder to qualify, but it's still doable, okay?
Yeah, one of the residency requirements are pretty simple. You have to live in the house 6 months and 1 day a year. It has to be your primary residence. So that's generally not too hard to beat, even for the snowbirds that come down. And then the other thing too is this is good on single family residence or 1 to 4 unit.
Correct.
So the only restriction on the 1 to 4 unit is that you have to live in one of the units.
Correct.
So you can even do that. And then basically the only obligations are you gotta pay your homeowner's insurance, your property tax, and any association dues, and you gotta maintain the house. That's it. That's the only obligations or responsibilities you have. And again, the primary residency for 6 months and 1 day a year.
And every year, you'll receive an occupancy letter that has to be filled out to show that you're still living on the property, which is very important, because if you're not filling out this document every single year, they'll start investigating and so forth. So you want to make sure that you always have access to that. And yeah.
Just like a regular mortgage, we'll compare it a little bit. Credit requirements on a regular mortgage, you have FICO requirements, you have all that stuff. On a reverse mortgage, there really isn't a lot. They look at the FICO, but it really has very little impact on the loan. Same thing on asset requirements. For a reverse mortgage, we just need enough to cover the equity commitment based upon the age of the person and the closing costs, and that's it. Everything's up front. That income requirements, not looked at all, because I say that
minimal.
The minimal, you have to be able to pay your taxes and insurance every year. They need to see some kind of income. And then the impounds and escrow, you can either pay those yourselves if you want, and annually, or if you would like, or if your FICO is real low, they may require it. We have what's called a LISA, which is Life Expectancy Savings Account. And what they do is they take a certain part of that line of credit and they put it into a savings account, and then the lender makes your tax insurance payments every year for you, so you don't have to worry about that. So it's kind of and some people just choose to do that. So, I would probably do that just because I wouldn't want to mess with it when I'm old, and just, let them do it and take care of it. There are a few times that reverse mortgage isn't a good option. Probably the biggest one is if you look at it and it's really not going to provide a benefit. There's a few times that happens. Also, if the borrower's not going to be in the home, this is really ideal for a forever home. You can get out of it, you can refinance it, you can sell the home and everything, but really it's set up for the forever home. When people that are getting my age, when they buy the last home, and this is the home that is going to become their legacy. The only other time that you might not want to do it, if it's a home that's been handed down through generations and generations and generations, at the end, when the person, the primary owner does die, or the last of the couple does die, the house has to be, within 6 months, you either have to refinance it or sell it. And so if it's something you wanna keep in the family forever, that might not be an option for it. But other than that, really, there's no other bad options.
And you mentioned you have 6 months, so if you pass away, I want that to be clear.
Yeah.
Okay, you do not lose the house. If you think you want to leave it for your kids, they have 6 months after your death, within 6 months, to refinance or sell the home.
Yeah.
So if there's any equity remaining, obviously that goes through your heirs, right? So,
And most lenders, that's the minimum, is 6 months. Most of the lenders are actually much more reasonable that, depending on the market and stuff.
You can extend it.
Yeah, you can extend it.
request to extend it.
The other thing that's really cool about that, when they do sell the house, they're guaranteed the 95% of the appraised value. They can buy it for 95%. So say the house is worth $300,000, they can buy it for $285.
Mhm.
So they're gonna make money, or whatever the balance is on the loan. So say the balance on the loan is $250, then they could buy it for $250. The equity remains with them.
Right.
Or they could sell it for $400 and get $150, in equity out of it. So it's safe, and the family is safe up to, one of the reasons for reverse mortgages is right now, 52% of the people, don't have any retirement savings when they retire at 62.
that's right.
52%, 62% are on an income. Over half of them are only relying on Social Security. They have no other income. And so in the Social Security checks right now, the average is about $1,600. So, they're on a fixed income and everything. 83% of the net worth in the United States is for people 62, is in their home equity. 17% is in their 401k, IRAs, retirement programs, things like that. And then pension plans are pretty much gone now. They just don't exist that much anymore, unless you work for the government. And even they're switching over to more of a 401k type of things, like a 403b or something like that. So this is when it does make sense, so that you don't have to tie all your cash up as a senior. Even like Jessica said, the people coming from California, even though they have cash to pay for a house, why tie up your cash in the house? Why not take half that cash, put it in the house, get yourself a reverse mortgage? It's not gonna cost you anything ever. Take that other cash, invest it. Go to your financial planner, get your 14, 15%, because the house is probably gonna appreciate at 5 to 8% on average. Why not take that other half of that money and put it at 15%? You wanna leave your kids legacy? That's how you do it.
Or buy another property.
Right.
You can still buy property for $300,000. Free and
This-
clear if you wanted to. That could be your residual income of it. I don't know.
Yeah,
Just
this
saying.
is,
Get a couple of investment, depending on how much
absolutely.
equity. Get a couple of
Yeah.
rental
If
properties.
you wanna just put down 30% and buy 2 or 3.
Right?
And turn them into Airbnbs. I mean, there's a lot of opportunity
Yeah.
there,
here's I put all the beliefs, because this is the stuff you're gonna hear when you talk to people about it. And basically, I highlighted the word lie, because they're all lies. There's 6